So I just decided to ditch my bank and go with a Fidelity Cash Management account instead. In this video today, I want to talk about my decision to do so and why I think it makes why it makes sense for a lot of people to break up with their banks and consider some alternatives. And especially for checking accounts, I just think the Fidelity Cash Management account is tough to beat. My name is Scott Caulfield. I'm a CPA and a CFA charter holder and the founder of Sophos Wealth Management. Now, I've seen a lot of clients and prospects with surprisingly large checking and savings account balances, and they're just way under optimized. In this whole new environment where we have interest rates the last few years, a lot of people out of habit have left money in those checking and savings accounts, often earning 0%. Even ones earning a little bit better are often only getting 2-3%. And there are far better alternatives out there today. Now let's look at the Fidelity Cash Management account so I can talk about why I decided to go with that. Now this is really just for my checking needs, money that I want to be able to write a check tomorrow to. Money's coming in, out. So the Fidelity Cash Management account works a lot like a traditional bank account. You can direct deposit money there, you can write checks from it, you can get money from an ATM. They will waive any US ATM fees. I think there's like a 1% fee on international. Essentially, this covers almost all your banking needs. You can't deposit cash there, might be the lone drawback, but I personally am still keeping another checking account open, literally just to do some of those traditional things like deposit cash, like if I need to go to the local bank and get something notarized. But I plan to do all my banking transactions, the normal check writing, the normal monthly direct deposits and debits and all that kind of stuff in the Fidelity Cash Management account. Make it super simple to do that. And when you sign up with them, you're given two options. You can either go with kind of the traditional FDIC sweep. So they'll take your money and sweep it overnight, and they will pay you 2.72% on that. Not bad, but not exciting. I probably wouldn't transfer just for that. That does have up to $5 million of FDIC insurance. But the option that I find is really interesting is this Fidelity Government Money Market Fund. So this is close to a 5% yield, 4.96 most recently. So this is actually in a vehicle called SPAXX. That's their money market fund. And that's mostly government securities and repurchase agreements of government securities. And they just make this automatic for you. It's not like you need to get in and out of this security. You just make your deposit in there. And when you write a check, they take it out. When you deposit money, they put it in. They make it super simple. So this is just, I think, one of the best options out there. I don't think you're going to I have not found any kind of alternatives that make it so simple and yet have such a high yield. So especially for checking assets, this is my favorite. Now, I do want to talk a little bit about maybe the drawbacks and some alternatives. So especially if you're thinking about money that might go towards, let's say it's your emergency fund or just kind of you keep a big savings balance. You want to be able to touch it, but you don't need to write a check tomorrow. In this instance, especially if you're willing to do just a little bit more work, there might be better alternatives. For instance, the drawbacks on this SPAXX is if you're in a state that has state and local income taxes, this is not 100% government bonds. So if you own US Treasury Securities, you don't have to pay state and local income taxes on those. The Fidelity account here, this money market fund, is only about 41% in government securities, meaning 41% of that income you're going to get from this is exempt, but the other 59% is not going to be exempt. Now, you can find alternatives that are close to 100% exempt. For instance, if you were to go with the iShares SHV, that is going to be close to 94.6% eligible US government securities, meaning almost 95% of the income is going to be exempt from state and local taxes. If you're willing to go with an option like SHV, so in this case, you would have to take your savings and actually purchase the security. And anytime you need to tap those, you'd have to sell it and transfer it yourself. But if you purchase that security, and you could do it in the Fidelity Cash Management account too, you're also going to get to pay a little bit lower fee. So the fee on SPAXX, the Fidelity Money Market Fund, is about 0.42%. Compare that to SHV, it's 0.15%. SHV is a little bit better option. They've got very similar yields. Both are just shy of 5%. Both are just in government securities and T-bill type securities, so maturity is less than a year. If you wanted to really kind of optimize, it's going to take more work, but you could pay no fees. You could open an account at TreasuryDirect.gov. And the money you put there, you can buy Treasury Securities. So if you wanted something similar, you could go buy T-bills, say 1 month, 3 month, 6 month, and you're not going to have to pay any fees for that. It's going to be 100% exempt from state and local taxes. It's just a little bit more of a headache to actually execute. For those who are familiar with the TreasuryDirect.gov site, it's a little bit archaic to navigate. You do have to be the one to roll your Treasury securities with when they mature. If you want to access that money before it matures, you've got to transfer it to a brokerage account and then sell it there. Oftentimes there's a fee for selling those at brokerages accounts, depends on where you're at, but it's just a little bit more work involved. Now that is something I do recommend for people that have money that they don't really plan to tap. So a lot of people, keep those 50,000, 100,000, 200,000 sort of rainy day funds around, or things that are earmarked for, let's say, a future down payment or kids' college that's coming up, let's say in the next year or two. So don't really want to take any risks with that money. That TreasuryDirect.gov can be a great option for them. But again, that's a lot more work than the Fidelity account that we've been talking about. So hopefully this gives you some food for thought, especially if you're looking at kind of optimizing your short-term savings and checking account. Again, going from 0% to close to 5% is a nice pickup. If you've got 10,000, 20,000 sitting in your checking account, you might be talking about $500 to $1,000 a year. So this can be pretty helpful. Hope you enjoyed this video. I encourage you to share it with anyone you think would benefit, and give it a like and subscribe to my channel. Thanks a lot for tuning in.